Good afternoon, ladies and gentlemen, and welcome to the Tremor International Q3 Investor Update. Throughout this presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time using the Q&A tab situated on the right-hand corner of your screen. Just please simply type in your question and press send. Given the significant attendance on today's call, the company will not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. These will be available via your Investor Meet Company dashboard, and we will notify you by email when they're ready for your review. I'd also like to remind you that this presentation is being recorded. Before we begin, we would like to submit the following poll, and if you would give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand over to William Eckert from Tremor. Good afternoon.
Thank you, operator, and good afternoon, everyone, and welcome to our Q3 update. With us on today's call are Ofer Druker, Tremor's Chief Executive Officer, and Sagi Niri, the company's Chief Financial Officer. During today's call, we may make forward-looking statements. All statements other than statements of historical fact could be deemed as forward-looking. We advise caution and reliance on forward-looking statements. These statements include, without limitation, projections about our future financial results and future business, and statements concerning the expected development, performance, and market share or competitive performance relating to products or services. All forward-looking statements are based on information available to us as of the date of this call. These statements involve known and unknown risks, uncertainties, and other factors that may cause our actual results to differ materially from those implied by these forward-looking statements, including unexpected changes in our business. More detailed information about these risk factors and additional risk factors are set forth in our filings with the U.S. Securities and Exchange Commission, including but not limited to those risks and uncertainties listed in the section entitled Risk Factors in our registration statement on Form F-1. Tremor does not intend to update or alter its forward-looking statements, whether as a result of new information, future events, or otherwise, except as required by law. Additionally, the management statements during this conference call will include discussions of certain measures and financial information in IFRS and non-IFRS terms. We refer you to the company's press release for additional details, including definitions of non-IFRS items and reconciliations of IFRS to non-IFRS results. At this time, it is my pleasure to introduce Ofer Druker, CEO of Tremor International. Ofer, please go ahead.
Thank you, Billy, and welcome to everyone joining us on today's webcast. Let me start by saying the third quarter was a significant period of growth for the company. Last week, we reported our strongest quarter in corporate history, and we are encouraged by the momentum we have generated across our core verticals, which I will cover in more details on the call today. Afterwards, our Chief Financial Officer, Sagi Niri, will review the highlights of our Q3 financial results. Following that, we will be able to take questions. First, I would like to cover some brief performance highlights for the 3 months ended September 30, 2021. We generated contribution ex-TAC of $76.7 million compared to $49.7 million in Q3 2020, 54% organic growth, and adjusted EBITDA of $42.3 million compared to $19.6 million in Q3 2020, which is 2.2 times growth. This reflected our strongest quarter reported to date, highlighted by September being the strongest single month since the company inception. For the 9 months ended September 30, 2021, we generated contribution ex-TAC of $213.4 million compared to $110.3 million in the 9 months of 2020, which reflects organic growth of 93% and adjusted EBITDA of $107.2 million compared to $21.4 million during the same period last year, which resulted in a 5 times growth. Our core growth driver is in CTV services, where our revenues grew 115% in Q3 2021 versus Q3 2020 and 188% in the 9 months period ended September 30, 2021, versus the same 9 months period in 2020. We also achieved a 49% EBITDA margin in Q3 2021 on a reported revenue basis and a 55% margin on net revenue, which is higher than the median of our direct peers. I emphasize that core of this performance is the strength of Tremor end-to-end technology and business platform, which covers the 3 pillars of this business: DSP, DMP, and SSP. Our end-to-end technology platform provides simplicity for our customers, better data empowerment for advertisers and publishers, and is accelerated the industry move towards supply path optimization. As we serve customers on both the demand side and supply side, Tremor obtain robust access to first and third-party data from both advertisers and media partners, which customers can leverage to generate better returns on ad spend and maximize their ad inventory revenue. Tremor platforms also offer customers key optionality on who they choose to partner with to best suit their needs. Our DSP, Tremor Video, is compatible with our SSP, Unruly, as well as other providers, while our SSP can also be leveraged by other DSPs as well. Later in this presentation, I will touch upon the continuous progress we are making in CTV, which is a key performance driver for Tremor. Tremor consistent primary focus on video and CTV has proven persistent in the today's market, leading to meaningful growth across our exchange and putting us ahead of platforms only recently evolving from display. We have enhanced our offering further through the acquisition of Spearad, our exclusive global ACR data partnership with VIDAA, and our recent launch of Programmatic TV Marketplace. I would also like to comment on perceived headwinds in our sector, as it's related to challenges associated with IDFA changes and cookie deprecation that are impacting our industry players. We don't anticipate a significant impact on our business. Our end-to-end platform and presence across all screens provide us with key advantages that reduce Tremor's exposure to these issues. We believe this strategy has proven successful, and we will continue to advance and enhance this model as we look to the future. It's also worth noting that although COVID-19 proved to be challenging, it is also served as an opportunity for Tremor by accelerating growth trends in segments that we have strong exposure in, such as CTV and video. Recently, however, many companies have been citing supply chain constraints attributable to the COVID-19 pandemic as a negative catalyst for the sector, as certain advertisers have reduced budgets due to these constraints. While we have seen some evidence of lower advertising spends to this point in Q4 2021 in center sector, particularly automotive, due to the chip shortage, we have seen stronger demand in other segments, and the diversification of our customer base on both the demand and supply side have helped offset any significant adverse impact to our business. I will now shift the discussion to our vision, and some of the key development that has occurred since the end of Q2. As I stated before, 4 years ago, our senior team set a plan to transform Tremor into a market-leading company focused on video, data, and CTV, with the ability to capture users across all screens, delivered through a full end-to-end tech platform. Our team has M&A execution experience and has successfully integrated companies in the past. We are constantly searching for strategic opportunities to acquire additional companies that can become meaningful contributors in video, data, and CTV, such as what we accomplished with the recent acquisition of Spearad. We believe we are delivering on our promise to continue expanding and enhancing each element of our end-to-end platform with an emphasis on CTV, and will continue to do so going forward. One recent example of this comes from the previously mentioned acquisition of Spearad, a global CTV ad server featuring a robust user interface with advanced tools for ad spot monetization. Spirit was purpose-built for broadcasters to deliver seamless TV-like experience in CTV and over-the-top environments. Spirit will be integrated into Tremor and Unruly SSP, enabling CTV header bidding, channel inventory management, and ad spot management. This transaction was particularly compelling as the addition of CTV ad server further expands our differentiation and strengthens our position within CTV, while also significantly deepening a relationship with our media partners and further complementing our end-to-end offering. Prior to this, media clients were reliant on either in-house ad servers or third parties, whereas now broadcasters with deep relationship with Tremor can leverage us on our ad server and header bidding capabilities. This enables us to maintain more of the relationship in-house and allow us to better serve our customers through added technology solutions. This will also allow us to potentially expand our revenue footprint with current customers, and we expect that it will also attract future media partners seeking to utilize this advanced technology solution. Not all ad servers have the CTV ad spot monetization capabilities like Spirit, which is why we were particularly excited about adding the technology. Built by savvy industry veterans to our end-to-end platform. We anticipate this technology addition will allow us to capture a greater portion of CTV inventory through both current and future media partners and provide added benefit to help those partners better control their inventory and maximize revenue opportunities. We will also continue to evaluate future strategic exclusive partnerships that expand our data reach and differentiation within CTV, such as partnership we recently announced with VIDAA. The partnerships give us exclusive global access to VIDAA's automatic content recognition, ACR data, pre-installed on most Hisense smart TVs, and is also integrated into a number of premium original equipment manufacturers, such as Toshiba. These partnerships give us access on an exclusive basis to VIDAA's global ACR data, accelerating our US and international growth and footprint. We will utilize the data for targeting purposes, making us one of the only end-to-end technology platforms outside the walled gardens with this type of data exclusivity. The agreement provides us access to VIDAA distribution, which reaches approximately 20 million smart TV globally, and will anticipate this reach could roughly double over the course of the partnership. The data will be available for activation for customers on both sides of our end-to-end platform, which will enable the ability to offer proprietary management capabilities for TV intelligence campaigns. I also want to highlight the recent launch of Tremor Programmatic TV Marketplace, which enables advertisers to access a centralized platform for planning CTV campaigns, facilitating turnkey campaigns activation, and providing greater transparency into the curation of data-driven audiences. Our TV Marketplace gives brands the ability to take even greater control over planning, execution, and customization of their TV campaigns, coupled with a more transparent view into the supply and audience targeting capabilities available to them. Within this marketplace, advertisers can activate deals leveraging Tremor content-level targeting solution, enabled by TV-like content attributes from direct media partners. By curating deals based on content attributes like genre and rating from Tremor media partners, advertisers can tap into traditional linear TV buying tactics in digital environments like CTV at scale. This expansion of Tremor contextual capabilities also address the market need for more privacy-mindful, verifiable targeting solution across CTV and video. Tremor also achieved a number of important business wins during the quarter. In Q3, we added 35 new U.S. supply partners across critical growth verticals such as sport, entertainment, and lifestyle, as well as original equipment manufacturers, OEM, and multicast video on demand, MVOD businesses. Our Unruly product team also streamlined revenue opportunities for publishers by rolling out consolidated and enhanced header bidding adapters on both the client side and server side. Publishers can now access Tremor video demand for all Unruly formats via a single adapter rather than legacy versions. Additionally, through Q3 21, Tremor Video observed a major increase in adoption of our data-driven creative offering, Truly, since 2020, including expansion across CTV, as well as substantial increase in client usage of our custom QR code solution for CTV. Truly continues to be a differentiator for Tremor and is a unique offering and advantage within our end-to-end solution. Truly is our in-house creative studio, and it allows us to provide custom, data-driven creative solution for our advertising customers to align with their complex global campaign objectives. Leveraging Truly underpins our strategy of being completely end-to-end, where advertisers and media partners can utilize us in all key aspects of their buying process across all screens, which offers us numerous growth trajectories and differentiation of revenue streams. Finally, our strong balance sheet and cash positions give us a strong foundation from which to continue exploring future growth opportunities through additional exclusive strategic global partnership or acquisitions. Tremor has a robust history and proven track record of successfully integrating this into our unified end-to-end platform, and we will continue to remain active in evaluating deals that can future complement and enhance our existing platform. With those comments complete, it is now my pleasure to turn the call over to Sagi to review our financial results.
Thank you, Ofer, and thank you everyone for joining us today. We are encouraged to see another record quarter of revenue and strong business momentum as we move into the fourth quarter of 2021. Today, I'll be discussing some of the highlights of our Q3 performance, as well as some of the key financial and operational drivers during the quarter. Tremor International achieved an outstanding record quarter in Q3, with revenue and adjusted EBITDA propelled by steady organic revenue growth. Our net revenue grew 54% in Q3 year over year and resulted in $76.7 million for Q3 2021 versus $49.7 million in Q3 2020, all of which was driven through strong organic growth. Our CTV revenues grew 115% in Q3 2021 versus Q3 2020, and we are poised to continue this growth as more business is increasingly being transacted through programmatic platforms. During the same period, our video net revenues grew 58%. For the 9 months ended September 30, 2021, CTV and video net revenues grew 188% and 112% respectively. As a result, we achieved adjusted EBITDA of $42.3 million in Q3 2021 and $107.2 million in the 9 months period of 2021, or adjusted EBITDA margins of 55% and 50% out of net revenues for the same periods respectively. For the 9 months ended September 30, 2021, Tremor generated $213.4 million in net revenues, which is an increase of 93% year over year. We continue to generate very strong adjusted EBITDA while investing in the critical areas of our business that can drive our future growth. Costs were lower than expected, driven by a postponement of our return to office, lower anticipated marketing event spend, and reduced travel and entertainment costs. We saw very strong year-over-year growth in Q3 and the 9 months period of 2021, which increased our EBITDA by 2.2 times and 5 times respectively compared to the same periods in 2020. We are focused on being highly competitive in CTV space and entered the segment early. With the enhancements we made to our offering during the pandemic, Our efforts resulted in 115% year-over-year CTV revenue growth in Q3 2021. Our video net revenue increased 58% from $40.1 million in Q3 2020 to $63.4 million in Q3 2021, which was driven by our video capabilities and sharp focus on this segment. We delivered significant growth in the 9 months period of 2021, during which we exceeded market expectations and proved once again that our strategy is working. Representing the latest milestone in the evolution of our end-to-end video-first platform and TV intelligence solution, our recent acquisition of Spearad and exclusive VIDAA partnership will enable more effective TV campaigns going forward for our partners in several important ways. Enhance our TV intelligence solution not only by providing an exclusive data set, but also by providing an opportunity for real-time targeting capabilities. VIDAA has a global reach of approximately $20 million smart TVs, allowing us to provide our international partners with a scalable TV targeting and measurement solution across a premium supply footprint, which we didn't have before. Spearad is a purpose-built technology for broadcasters, addressing the unique needs of delivering a seamless TV-like experience for consumers that can benefit our media partners through operational and cost efficiencies, increased buying power, maximized revenue opportunities, and advanced UI, and our customer with expanded access to premium global CTV and OTT supply and advanced ad bot targeting capabilities. We believe we have a competitive advantage with our omni-channel end-to-end platform versus one-dimensional solutions. We have developed a profitable business model with high efficiency around operating costs, leading to operating leverage, economies of scale, and strong productivity. Among our EdTech peers, Tremor is one of the highest margin and operational profitability, resulting in a 49% adjusted EBITDA margin in Q3 2021 on a reported revenue basis and 55% on a net revenue basis. Turning to our cash flow, we generated net cash from operating activities of $44.6 million for Q3 2021 versus $4.5 million in Q3 2020, which is an increase of around 900%. For the 9 months ended September 30, 2021, we generated net cash from operating activities of $121.4 million versus $11.7 million in the 9 months ended September 30, 2020, a 940% increase. As of the 30th of September, we had $333.3 million cash and cash equivalent with no debt. We also experienced 99% free cash flow conversion during the quarter. Non-IFRS diluted earnings per ordinary share is 21 cents for Q3 2021 versus 11 cents in Q3 2020 and 56 cents for the 9 months ended September 30, 2021 versus 7 cents for the 9 months ended September 30, 2020. Finally, I will turn to our outlook. As a reminder, we expect our return to office, marketing, and travel costs will add an incremental $1.5 to $2 million per quarter in operating expenses next year. For the fourth quarter of 2021, we expect net revenue to be at least $85 million, which represent year-over-year growth of approximately 16%, and Q4 2021 adjusted EBITDA to be at least $42 million, which represent year-over-year growth of approximately 7%. We also expect annual 2021 adjusted EBITDA to be at least $149 million, which represent year-over-year growth of approximately 145%, and expected annual 2021 adjusted EBITDA margin of 50% as a percentage of net revenue compared to 33% in 2020. This guidance reflects anticipated full-year organic contribution ex-TAC and adjusted EBITDA growth of approximately 62% and 150% respectively, and underscores that our efficient end-to-end model focused on CTV is helping us achieve excellent growth and profitability. We believe that our growth profile, efficient end-to-end model, and healthy balance sheet position Tremor to continue taking advantage of a rapidly growing digital advertising market. With my remarks completed, I'll turn the call back to Ofer.
Thank you, Sagi. To summarize, we believe we are well positioned within the industry thanks to key advantages we achieve from being a completely end-to-end. Our unified platform provides advertisers and media partners with simplicity and better data empowerment, while also accelerating the industry move towards supply path optimization. We have built this platform with an heavy focus on CTV, video, and data, where our customers rely on our deep expertise and actionable insights, and which now accounts for 92% of our programmatic net revenue. We continue to believe that advertisers and media partners will rely on and allocate additional spend towards fewer companies with diverse portfolios of solutions that can service them across all parts of buying process and across all screens, regardless of their service level needs. We will also continue to deliver on our promise to expand and enhance our end-to-end CTV capabilities for customers, such as what we achieved through our recent acquisition of Spearad, which further complemented our end-to-end platform offering. We have also taken steps further our US and international footprint and accelerate our growth in those key markets, while differentiating ourselves through global data exclusivity via the partnership with VIDAA. As we look ahead, we will continue to evaluate additional strategic acquisition opportunities while also continuing to make investment in our product, R&D, sales, and marketing, and help propel future growth and increase our market share. Finally, on the investor relations front, we anticipate being far more active with both US and global investors through attending investor conferences, conducting tech demos, and participating in non-deal roadshows with the firms that cover Tremor. We will be very busy working towards garnering additional interest from current and prospective shareholders. We believe that we have a compelling story and value proposition with strategic differentiation and advantages that more investors and customers will see the benefit of as we move ahead. We look forward to speaking with current and prospective investors at RBC Global Technology, Internet, Media, and Telecom Virtual Conference on November 17, Raymond James Technology Investors Conference on December 6, and Needham Growth Conference on January 10. We believe that we have a significant room for growth and remain confident about our future. We will now open the call to investors' questions.
That's great. Ofer, Sagi, Yanif, William, thank you so much for updating investors this afternoon. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab that's situated on the right-hand corner of your screen. But just while the company take a few moments to review those investor questions submitted already, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet Company dashboard. We will send you an email when they're ready for your review. I'd also like to remind you that your feedback is important to the company, and immediately after this presentation has ended, we'll redirect you in order that you can provide the company with your thoughts and expectations. William, obviously you had a number of pre-submitted questions, which I know that you are looking to address, and there's been obviously a number of questions that have been submitted during today's meeting. Obviously, a lot of these are kind of common in theme. So perhaps if I just hand back to you, if I could ask you to read out the question and where appropriate, give a response, and then I'll pick up from you at the end. Thank you.
Absolutely, that sounds great. So first of all, to everybody listening in on the line, thank you so much for your questions. As the operator mentioned, we do have a number of them with commonality and theme, so we're going to try to address as many as we can here. But for starters, Ofer, how buoyant would you say the CTV marketplace is?
When we're looking at CTV in the last few years, I think that CTV was a promise already about 4 or 5 years ago, and even more. It was always like the vision and the dream of a lot of marketeers. What happened during the pandemic is basically accelerating that was supposed to happen over a few years into 1.5 years or even less than that. And people now consume more and more content through CTV platforms. What basically happened is that also the media companies that are responsible for this content and are trying to reach these clients basically added more and more content and build more and more CTV platforms in order to address the need and the request of users to consume content through CTV. Of course, this what brought into play is advertisers. Since advertisers are looking to be in front of their audiences and targeted audiences, advertisers moved and shift much more budgets into CTV. When we're looking at the future, we feel that CTV is here to stay. We think that CTV is here to stay. CTV is growing immensely in the US and now moving also to the international markets in a very big way, because again, the audiences are basically voting by sitting in front of CTV platforms and watching and consuming content, and that's the place that advertisers want to be. If you look at our vision from a few years ago when we acquired and merged with Rhythm One under that was a company called Yumi that was basically putting a lot of emphasis on CTV advertising, and we basically integrated all this knowledge, a lot of the technology, a lot of the knowledge into our entity. And since then, we spoke about putting the focus on video, data, and CTV, and that's what we are doing. And we still believe that targeting, as we see, will be the major differentiator for advertisers to choose on what platform to run. And we are proud to say that also on the CTV going forward, we enhance our capabilities through the acquisition of Spirit, but also through the VIDAA data, ACR data that we basically signed for the coming years. That's giving us like a very unique opportunity to attract advertisers and also CTV partners to cooperate with us. Since, as we say, our data can work for both sides, the DSP side and also the SSP side, which means the publishers. We believe that it will give us a major advantage in the US and in other main markets like UK, Germany, Australia, Japan, Canada, and more. And we believe that Spirit will give us additional power as a very sophisticated platform that will be integrated into CTV partners in order to deliver them the capability to connect in a smart manner to us and other sources of revenues. And the last point is also the TV marketplace that we built that is already making an impact. And we will keep innovate and work on this important field because we believe that CTV is here to stay, and CTV is a major part of our growth engine and our basically KPI and target for all the teams, of course, including technology, sales, and marketing.
Great. Thanks so much, Ofer. And as we scroll through some other questions here, it seems that some have the perception that the market trend seems to be OEMs forming DSP walled gardens, and there's the likelihood that broadcasters and media companies will form their own SSPs. Do you find that there's really a future for the open internet and ad tech companies, or will advertisers basically be held ransom by sort of an inefficient structure?
So I think that CTV is a good example basically to an opportunity for what we call the open internet market. And we see the growth of companies like our peers, mostly the Trade Desk that is growing on the open market. And we believe that what we are doing now is basically giving us an opportunity to grow. In the past, people were talking about these walled gardens that they have the most opportunity in order to grow, but we see that CTV basically shuffled the cards and giving opportunity to much more companies to participate in this industry. And we are well positioned in order to do that. Since, as I mentioned, and I will not repeat myself again and again, but I just want to emphasize it, is that basically the fact that we are end-to-end solution, putting an emphasis on CTV for a couple of years, inherited and acquired a lot of technology that is related to CTV advertising, and equip ourselves with more and more capabilities in order for the future, like the VIDAA data, which will make a differentiator, and it's exactly what is written here in the question. Not just OEM and DSPs are building a walled gardens. We have also an ability now to use the data of Hisense and Toshiba and other companies that are using VIDAA operation system. And also with the acquisition of Spirit, launching of the TV marketplace, collecting data and enabling targeting according to content. All that will give us a strong future in the years to come.
Great, thank you. And as I look, there's another common theme that I'm seeing amongst people that have asked questions in the chat. Are you able, whether it's you, Ofer, or Yaniv, or Sagi, are you able to provide CTV revenue guidance for Q4?
So Until now, we didn't give any guidance for CTV, and we are not going to start doing that now. I think that we chose, of course, to give guidance on several KPIs that we look at. CTV is not something that we are reporting on or giving guidance on, and basically we are not going to do that in this quarter. Not from every, strange reason, because we cannot do that in the middle of the quarter, basically.
Okay, great. And as we continue on here and look at the questions, has the decline in CTV revenue, the perceived conservative Q4 guidance and sort of the lowish 22 guidance perceived by some, have anything to do with the termination of the Alphonso partnership, and how much CTV revenue was dependent on the LG data feed ex Alphonso?
Okay. So I must say we are, Billy was reading this question from the chat, of course. We don't agree that there is a decline in CTV revenues. That there is a seasonality, like I said to several investors. Each quarter basically represents growth and trends, different trends in different verticals, and different adoption level of advertisers to new formats or the willingness to run on different formats. And we will not call it a decline. I will not call it a decline on CTV revenues. We are saying that it's a seasonality, and usually Q2 is stronger than Q3 in our history, and we look at it basically also in this time. The second thing, our conservative guidance for Q4 and for next year, basically because there is headwinds about supply chain issues in the market, and we want to be cautious. We provide a very strong 5 quarters. The last 5 quarters for us were elevating the guidance all the time, and we gave like very strong 5 quarters. And we want to stay conservative and honest with ourselves and with our shareholders by giving a target that we feel good about, and we think that just because of what's going on around this industry, you need to be more conservative than usual. Regarding 2022 and Q4 also, when we look at the numbers from last year Q4 was one of the strongest quarters in our life, of course, or the strongest. We generated about $73 million of net revenues. So, and it was a combination of many things that happened last year, because if you remember, COVID struck in Q2, and a lot of the budgets that companies was feeling more comfortable to spend came in the second half of the year, from June going forward to the end of the year. So we enjoyed from this all budget squeezing into the last 4 or 5 months of the year, and it's unusual numbers. So when we look at Q4 this year, we still grow, but we need to compare it to Q4 in 2020. That was the strongest ever, and it was an amazing quarter last year that broke all the records because, as I mentioned, a lot of the spend, a lot of the budget were moving to the last quarter. Regarding 2022, I think that in our size, in our growth, we are reporting we are not giving guidance for 2022. Analysts are talking about around 20% growth. And I think that, and there is on the programmatic level, and there is an element that's supposed to probably go down a little bit, which is the performance. This is basically balancing our growth, according to analysts, to around 18%, which is a fair growth right now in this session, but we are going to address it by the end of the year when we see more about the supply chain issues, and we see that we will understand more about the situation in 22. I think that we'll be able to give much more responsible forecast and much more down to the earth numbers regarding the year. Now, regarding Alphonso, I don't want to skip it. Alphonso didn't basically. Alphonso was a partner of us for several years. We indicated also in the F1 that the relationship with these companies were terminated. The good news is that we basically switched to another technology provider that provides us the same capabilities as Alphonso in much better terms in general. And the agreement with VIDAA will give us stability for the coming years. No doubt that Alphonso and the people that saw the lawsuit that we are basically charged against them is because of a very aggressive activity of Alphonso against basically our company. And we took legal actions in order to protect us, protect our stakeholders and shareholders in this activity. And we believe, of course, that regarding reporting and so on, that when we checked, we saw that basically it's affecting our company, but not in a meaningful way that we need to report on that. And as you saw, we touched targets and even exceed them. We believe that with Alfonso, we can do even better, but that's life, that's reality, and we are managing it. We are going to basically keep fighting for our rights and to get this issue straightened up. Regarding how much revenues was dependent on Alfonso, Alfonso was running with us as a data element that was running across screens. So it's not that we are dependent on Alfonso in order to drive CTV. We have alternative for that. As I mentioned, it's of course get us like it has an impact, but not a meaningful one, and we can manage. We manage basically to reach our targets without Alfonso.
Great, thank you, Ofer. Let's keep going here. First of all, thank you to everybody who's asking these questions. There's quite a few in here, and there's some really good ones in here. One that seems to be coming up pretty consistently, and Ofer, Yaniv, Sagi, this is going to involve all three of you. Can we provide an explanation on some of the recent director dealings that have come out?
Yes. So basically, we have all existing disclosures relating to director dealing are all part of previously established non-discretionary plan to trade in the company's ordinary shares in accordance with the terms of Rule 10b5-1, promulgated under the U.S. Securities Exchange Act of 1934. This formed part of the program put into place immediately after the Nasdaq dual listing and allows insiders to set up a predetermined plan to sell shares in the company in accordance with insider trading laws. The price, amount, and sales dates have all been predetermined by the formula or metrics. I just want to indicate that as the leadership of a traded company in Nasdaq, we are always dealing with partnerships, strategic partnership, potential acquisitions, and basically there are companies that for them it's mandatory to create this plan. We basically recommended all management to do that because we don't want to be in a situation that management that are involved in discussions about partnership, discussions about potential acquisition of a company will make a mistake, and without even knowing that will even make like any deal that will sell some shares. All of us, all the management sold very small amount of our shares, and we built a plan for the coming 12 to 18 months. We didn't aim to the date that was we sell the shares. It didn't come to us as a plan that we targeted this date. We created a plan for the next 12 and 18 months together with all management, and the plan is basically operating itself. When you reach certain level, it's giving orders to sell small portions of our shares. So it's not that we don't believe in the company. We believe in the company. We work very hard in order to achieve its targets. I don't think that it's related to that. You need to understand that every portion, very big portion of our compensation is based on shares. And of course, after a few years, you want also to enjoy also from this revenue stream. And we are doing that according to the rules and doing that in what we call blind sale for the next 12, 18 months in order to be able to keep running without any hesitant on building the company through partnership, exclusive partnership, meaningful partnership, potential acquisition that we are doing. We don't want to restrict ourselves or restrict the company from doing that because of thinking about sales of shares and so on. So that's my answer to that.
Great, thank you. Let me just jump back into the chat here. Okay, so this is one that has sort of come back or been asked by a number of investors as well. Ofer, would you consider a buyback to help support the price? The previous one was paused with the U.S. listing. Is that something that you consider?
As you know, most of the people on this call are working with the company as investing in shareholders of the company for many years. So you know that we've done it before, and we believe in this method because we believe that with the cash that we are generating and with the value that we were until now, the company was growing. We improved the value of the company over time, but it still didn't close the gap between our performance and the value of the company. So we feel like a very good investment for our money, basically ourselves, and we are not against it. We are supportive of this idea, but we need to do that carefully when we are now traded in Nasdaq, and less than 1 year after you are traded in Nasdaq, some of the advisors told us to basically wait and see, because what we are doing now is increasing the attention and the awareness of U.S. investors to our share and our performance. I think that this is something that we need to do, and if we will need to do that in the future, we are open-minded. We know that this is a tool that we can use in order to collect shares in the market instead of dropping the price without any reason. So basically, we are open to that, and we think that it needs to be done in the right timing, in the right scenarios, and we are checking ourselves all the time regarding this, and we are not ignoring these capabilities. And as we said, we did it in the past, and we'll support and we'll do that in the future when it will make sense.
Great. And we'll just do a few more from in here. So actually, this is sort of a good follow-up question to that. So someone in the chat asked sort of, why have we not really been actively marketing in the U.S. since the IPO in June? And obviously, as we indicated in the prepared remarks on the earnings call, that's something that we intend to do fairly aggressively over the next few weeks. But, what are your thoughts on marketing in the U.S. around NDRs, attending investor conferences, doing tech demos? Is that something that excites you, something we're looking forward to over the next few weeks?
Sure. I want to say something very important about it. Since we went public or dual listed in June, 18th of June this year, we need to understand that there is a closed period that the company basically cannot market or share too much information outside in order to bring more, to create like a buzz around the company and so on. So we needed to be careful of that. And then we already discussed and spoke to a lot of investors during this period when we could, but I think that everybody was waiting for our notice of Q3 that just came out, and now we feel much more ready for the market, and that's why we plan to do now a lot of non-deal roadshows, conferences, tech demos. That's starting today, by the way. We have today Needham Tech Conference, tech demo. Tomorrow we have the RBC conferences. We have a lot of discussions, one-on-one and group calls with investors, and we feel that this is, of course, a very important element of our job. This is a very important task for us as a company to create more awareness, more attention to our share, because I think that we have a lot of reasons to be proud of, and we need to spread the rumor and to spread the story around in order to get more support from U.S. investors.
Great. So sorry, everyone. A lot of these questions have a lot of overlap. Okay, yeah, that's one that's coming up quite a bit. Thank you, Ofer. So are you sort of disappointed with the performance of the stock since the dual listing of Tremor on Nasdaq?
I think that obviously the answer should be yes, but I think that what I learned also from the UK behavior, if you remember I remember that I got to be the CEO of Tremor in basically April 2019, and we did a lot of consolidation. We generated good results, and I think that it takes time for investors to realize it. They start following the company, they start looking at that, they start watching the performance, and I think that in this case you need to be patient and you need to look forward for the midterm, not immediately, because in this case, what you need to do is to meet a lot of investors, prove yourself, deliver results. That's why also, as I mentioned, we need to be very careful about giving just numbers before you know what is the situation of the market and so on going forward. And I think that we are driving very good results to grow a size of a company in our size. And these numbers, it's amazing. When you look at the first 9 months, 93% is unbelievable. But having said that, it's frustrating because when you look at the margin and you look at the growth, even this quarter in Q3, we saw other companies reporting on much less growth and profitability than us in the last couple of weeks. When you're looking at the growth on 9 months, as I mentioned, 93%, quarter-over-quarter, 54%. Some of our peers basically grow much less than us or not as big as us. And when you're looking at our EBITDA growth, we grow much better than most of our peers. So I think that, of course, it's disappointing, but we are patient, and we know that we are leading a great company, and we believe in our future, in our capability in the mid and long term to establish value for our company. And the people that joined us like 2 years ago, when the share price was about £1.5, maybe they've forgotten that, but I think that because it's like 2 years and so on, but I think that we are proud, all of us, and we are proud of our shareholders that basically believe in us and work side by side with us all these years in order to create the company that we are running now. And if you look at it, we were like 200 million pounds like almost 2 years ago, and now we are 1 billion pounds a company, and we have a lot of room to grow. It's not a slogan. We have really a lot of room to grow in the future, and I think that we have all the ingredients in order to do that. Meaning the teams that we are dealing with, which is video, data, and CTV, the end-to-end platforms, and you are welcome to listen to all the other scripts of other companies and our peers. Everybody's talking about the end-to-end side. We are doing it already for 2 years, and we are doing it very successfully. And I think that we just need to be patient, and I think that we will gain the trust of the US investors like we gained the trust of the UK investors, and the share price will basically, correct himself to the surrounding and the peers of this industry in general. That's my belief, and that's what we are working for on a daily basis.
Great. Thanks, Ofer. It looks like we just have time for a couple more here. So here's a good one from one of the participants on the line. How long will it take to integrate SpearAd into your systems?
Okay. So as you saw in the past, I think that to acquire a company, it's an easy task, relatively easy task if you're not basically integrating it after. Of course, it's a complex and dangerous process, but it's easier to buy than to integrate. I think that's what we proved ourselves in the last couple of years, that we are not just acquiring, but we are quickly integrating these companies into our ecosystem. And our basically plan is to integrate SpearAd in the beginning of next year, in the first quarter. This business will be integrated into Unruly, which is basically our SSP. That's the place that it should belong.
Great. As we continue on here, sorry, everyone, a lot of overlap in these questions, so I want to make sure that we're touching on all the topics to the best extent that we can.
William, don't worry. Just while you look for the final question to wrap on with, obviously we'll make all of these questions available to you. So if there are any gaps within the answers, we can always provide those post the meeting. So I'll hand back to you just for that final question, and then we'll redirect investors for feedback.
Great, that sounds good. So the final question that I have here for everybody on the line, so again, thank you so much for your participation and for your questions. Ofer, Sagi, and Yves, what industry barriers are there currently, and how are you working to overcome them?
When we look at that, I think that in this industry today, size matter. As we mentioned in this script also, the advertisers, when we look at that, they were a little bit confused. There were like hundreds of companies that basically approached them, offering them technologies, different technologies. Each one of them is covering some capability that they thought that it's important for them to integrate and to accept. And they needed to connect to so many providers in order to drive their campaigns. I think that people are looking for simplicity. And I think that you can gain that through size, through wide range of capabilities that you got. And we are doing it in two ways. One of them, organically, we keep developing our product and keep developing and enhancing our innovation around that. That's what we mentioned that we will do, and we are doing. And I think that this is very important. The second one is through acquisitions, as we did in the past few years. To the ones that just joined the company, just to give you an heads up, I'd like to give you a little bit of background. In order to close the gap to video, because we believed in video, we acquired Tremor in the summer of 2017. And after that, we made an acquisition of Rhythm One in order to create the end-to-end solution, because we needed this platform in order to get, as I said, end-to-end and simplicity and CTV. And then we acquired Unruly in order to enhance and get also presence in the international markets and to get better data tools like the EQ and a lot of relationship with strong advertisers around the globe. So we have two paths of growth and to close the barriers that the industry is basically facing. One of them is organic growth, development, a lot of R&D, a lot of innovation in our product team. And the second one is through acquisition, to choose the right companies that can fit to our ecosystem. And when we're saying fit, it's the fit that is also considered not just technology, not just business model, but also values and a lot of other important things that help after the integration, creating like one company, basically like we do today. So when you look today on our company, you will find that it's not a mix of a lot of companies. It's really one company that is functional. And this is a very important element that is basically driving us going forward.
William, I might just interject then at this point as we come up to the hour, and firstly thank all those investors that have taken the time to submit questions during today's call. I know investor feedback is particularly important to the company, and we will shortly redirect investors to provide you with their thoughts and expectations. But I guess before doing so, if I could just hand back over for one final time, just for a few closing comments just to wrap up with, and then I'll divert investors to give you their thoughts.
Yes. I think that what is important for me to say to this forum is that we are proud today, and we were proud last week to report our results. We are proud of our journey in the last few years, building one of the strongest companies around CTV, video, and data. And it's not a slogan. You can look at the market and see the growth path, the profitability, the partners that are joining us, the partnership that we are creating are really amazing. And I think that all of you should be proud and you're holding in the company and believe in the company that really made it happen in the last few years. It's a very competitive marketplace, and I think that we were able to build a very strong platform that keep delivering its results, very profitable, growing much more than most of its peers. And this is something that, I will be honest with you, I felt that when we generated these results, I didn't expect this type of call, but I expected other type of calls. But I think that all of you can be proud on your choice to invest in us. And I think that what we built and delivered in the past few years is unbelievable. And I think seriously that there is a lot of room to grow in the future. So we believe in the company. We come to work every day, every given moment in order to make it better. And we really like to hear your feedback, not because we are just trying to be nice, because we learn from that and we need to explain things. And sometimes people, and I saw it over the last few days several times, are reading materials in a different manner than it should be or can be, because they are looking at things in a, like the Alfonso thing that I will touch, that I saw that one day after we announced basically our earnings, there were rumors in the industry about profit warning. These things cannot happen. If you trust the company and we believe we deliver just earnings the day before, you should trust us that these are the numbers that we are reporting, of course, and it was a very successful quarter and growth for us. So I think that all of us needs to look at the future. We need patience. I think that what we did in the last 2 or 3 years is amazing development, not just development in size, but also from value proposition. I think that most of the holders here that are on this call, and if they follow the company in the last 2 years, you see the evolution of the share price, evolution of the company, and the potential that the company can bring in the future. I think that you all should be proud about being part of this company. And we look at you as partners and shareholders of us, and we want you to give us all your feedback that you can, honestly, and we will try to address it in a proper manner. There are things that we cannot basically do because of limitation, but whatever we can do, we will be able to answer and to provide reassurance to you that you're basically in a company that is transparent, delivering its results and growing forward.
Ofer, Thank you very much indeed. And to Sagi, Yanif, and to William, thank you for updating investors this afternoon. Could I please ask investors not to close this session, as we'll now automatically redirect you for the opportunity to provide your feedback in order that the company can better understand your views and expectations. This will only take a few moments to complete, but as Offa's just said, I'm sure it will be greatly received by the company. On behalf of the management team of Tremor International Limited, we'd like to thank you for attending today's presentation. That now concludes today's session. Good afternoon or good morning to you in the US, to you all.